Now, if you're short, that's good. So that's why it's listed as a bullish return in essence. Crash landers is another bearish strategy. Its stocks are up, or down rather, 4.5% today. Show me the money. I don't see a long strategy yet. Okay. Anybody see a long strategy there? It says bearish, 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 bearish. All right. So inside each one of those are the strategies. We can see which ones are falling off the cliff. Well, it's a lot of these stocks that went ballistic that have no earnings. Hence, ballistic new highs short. So Applied Opto, Cypher, some of these Bitcoin related edge stuff has been rocking and rolling, right? Upstart, kind of a blast from the past from 2020. Really interesting tech, not really making it, well, not really making any money, aren't making any money yet, okay? This kind of thing. So these are good opportunities to consider shorting still should the market continue to fall. We get a little bit more evidence that it's sustainable. But would have been ripe for the picking just for maybe a day trade today. And you can do pretty good work on a basket of stocks that, if we had signal early on today, have done nothing but continue to fall throughout the course of the session. Here's another one, Opera has earnings, but not enough to warrant the rise that they've had this year. And I think they're coming back down to earth to the tune of about 25% today, it looks like. So that's how this works. The fastest runners go to the top. It's like, that's why we call it the Derby. It's modeled after the spirit of a horse race, and it gets right to where the action is. What are the lead horses? What are the horses leading the charge either direction? As we come over here to the left, we've got this little box here called the Derby timing indicator. And in here, it's very sophisticated, actually. It looks at a lot of things. You can click on this question mark, and it'll give you, everything that we look at, which is a lot. We look at the major indice movements. We look at the advanced decline numbers. We look at about 9 different iterations of all 300 strategies that we have here in VectorVest and their directional movement. And we kind of wrap all that into this mechanic here. We also look at the magnitude of those movements, okay? So not just the direction, but also the magnitudes. And we end up with a composite number here for both bullish and bearish side of the stock market. And what you have is, as of this moment, all these are 0 to 2. Above 1 means there's more strength than not in that direction. Okay, now it's possible for both bars to be below 1. It's possible for both bars to be above 1. But what we're looking for are these situations where separations are being made in a big way. Okay, so how can we observe that as it's happening would be the natural question, and show me some proof of concept here. Would be the natural question that I would be asking if I was in your shoes. So I'm so glad you asked. We will click right on this box, actually. And when we do, on the top, you will have the stock market direction. And this is intraday at this point. So it starts at 9:30 a.m., goes to where we are now. And largely that it was straight down. Well, straight down's a bit much. It was consistently down. Okay. Magnitude's important. And, that's a pretty substantial move, but it's not straight down. All right. So consistently down early, has kind of leveled and sideways a bit here as of late. What do we see with this indicator early? Well, remember, markets opened up higher than the prior close and then kind of fell through the session, right? I believe anyway. Let's double check that here in a sec. Yeah, opened higher and fell through. I got to work a little late this morning. But that's what I remembered. All right, let's go into the intraday. We'll get back to that bigger picture here in a second because that picture is important too. And then you can kind of slice and dice how much data you want to look at and all that kind of stuff. You can look at more than just today. But what's going to happen is down here on the bottom, you're going to have those bar numbers referenced as lines on this chart. So it's a lot like a stochastics or something like that, where you've got this subchart that's going to ultimately give you bullish or bearish signal at some point based upon interpretation and how they're calculated, right? So these aren't on there by default, but we like to draw them. There's one at 1, and that's the delimiter between favorable or unfavorable. Red is bearish, green is bullish. So if the green is above 1 and rising, bullish trades are favorable. If the red line is above 1 and rising, bearish trades are favorable. We've also got one at 1.2 because we found that to be a little bit more robust in terms of consistency on a day in, day out basis. I'll be the first one to also tell you at this stage, there is nothing perfect ever. Otherwise, you wouldn't have 47 technical indicators that you can put on a chart, right? But this is about the best thing I've ever seen. And what it does is, as we're seeing the red go up above and the green go down below, we want to be favoring, and we got about the first half hour of trading, amateur hours kind of coming to an end, and we can make a judgment here. And the judgment will be to think about short side of the market for today, if we're going to do anything at all. Now, I would say this, generally speaking, I only like to do this if I see a major reversal pattern on the daily chart or the primary wave is already down, right? So I don't like to do this, in the midst of overwhelming strength still. Need something more than just this to particularly if you're going to jump in for more than just the day. If you're just going to do the day, this is really all you need. Okay. Most of our folks don't like to do just the day. And so I'm willing to bet that most of the people in this room right now don't like to do just the day. Okay, but we can show you some history here. It was almost entirely bullish all day yesterday. So early we had opportunity to jump on trades long and did. Okay. The day before that, we had plenty of bull signal early. It kind of deteriorated a bit, so we put the brakes on, and I don't think we did all that much that day. This one here, bullish early and bullish enough. So we've been trading long this week and have done quite well. Problem is today you had down and plenty of confirmation down here. So, if I'm in the room, I'm not taking long trades today. Now, unless they're specified as to why. So you can have an edge case scenario. There's an exception to every rule. We don't want to do those very often, right? But sometimes things just look too good not to do. But yeah, this is what we want to do, 99.97. And I mean that number. 99.97% of the time, you don't want to trade long today, okay? All right, so let me get, so that's pretty cool, right? How many services were telling you that all day long today? Just think of how many that might be just off the top of your head right now. How many do you think there would be after the open we had this morning? Probably not very many. It's going to be my guess, right? So, if any at all, right, besides us. I'm sure there's probably someone, and usually those are the ones that are always bearish, All right, let's get out of here. Got to have fun. You got to have fun when you're doing this, okay? Let me get out of here. I'm going to go to the 3-month chart because this is why we've been long, most of the week. This is also a little bit of a concern. So, where are we? Lay of the land. I would honestly, if I'm going to draw this line, I'm really going to draw it about there. The reality is we haven't totally busted loose to this zone yet. Now, we still might, because there is a phenomenon in the technical analysis community called a retest. And they often happen around three-touch lines which have a lot of strength. And that is, hey, the bears kind of feel like, well, what's everybody doing? They let them get away with this, push through the point where we want to attack them. These are the prices where the last 3 times the market has achieved it, the market is sold off essentially. And so, gee whiz, guys, why are we letting them get through here this time? It was also kind of a layer of support earlier. And this is common, okay? So the big question, and the reason you don't want to get too aggressive here on the short side just yet, is there's a possibility, and actually a pretty good one, that this support holds, depending on how earnings season goes. It looks to me, not having a chance to see any of the fact set numbers yet or anything, that things were kind of hit and miss today with some pretty big names. So, yeah, not off to the best of starts, and we kind of wrote about that last week and said, hey, consensus expectations this coming quarter for earnings is the first time since, I can't remember, like 2020, I believe, that, they're expecting weakness to the tune of about 7.2%. on earnings across the S&P. So, that's not good, right? And we're starting to see some of that come to fruition. So this may not hold is the story there. In fact, it's probably more likely not to than it is to. But the reality is you can't step in front of that ball, because just think about what we said. That's not a certainty, and there never is. So you got to see these things happen before you want to actually take action on them. So we're going to do one of two things next week, and maybe as early as Monday. If it looks like, I would say this, I'm going to feel real comfortable about downside if we get through this gap. Okay, feel real comfortable, at least for the next few days to possibly few weeks, depending. Okay, but if we hold anywhere near where we are, or even in this gap, and start to reverse, we'll get back on the long side of the train again, because it looks like support is holding. And what we'll do is, from the home page, we'll want to make sure that we stay up. We want to make sure that this confirmed up is holding, right? And then we want to make sure that our DTI is opposite of what we see today. When those conditions are met, which is purely mechanical and very easy to interpret, right? We want a bullish market from a daily perspective, which accounts for more than just the day if you understand our timing signals and indicators. And we also then want to see confirmation early on in a trading day that supports that direction, right? So the extra layer here is often the missing piece to the puzzle for a lot of our subscribers, is they don't really know how to account for what we call follow through. That's what this DTI is built to do. It's to account for follow through, to help you determine is it more likely to be a follow through day or not. There's never a certainty, okay? There never is. All you need are tools that are right far more often than they're wrong in terms of market direction. You don't even need to be that good on the stock level. But in terms of market direction, they need to be right a lot more often than they're wrong. Okay? All right, so with all that being said, hopefully that imparts some comfort in you, knowing that, hey, this guy sounds like he's been around. Well, I have, I've been using this stuff for a long time, okay? All right, so with that, let's go back over and then say, well, let's suppose that we're in the middle of next week, right? And the primary wave is already down, and we've already busted through what could be support by way of that gap. Sometimes price runs a little too hot. Prices want to come back, fill in some of that missing element. Let's say we plus through all of that, everything's red, DTI is red like it is now. What you want to do is come in here to these top strategies and look for potential trading opportunities, okay? Now, some of you are going to be like, hey, look, man, I don't want to go short. Contra ETFs are a possibility. You can even take the leverage out. If you don't know what I'm talking about, you definitely don't want to start with leveraged contra ETFs. But those can work as a surrogate for shorting stocks, okay? And it's something that you buy long, and if you buy like the Dow contra ETF and the Dow falls, it goes up, just like buying a stock, okay? But for those that are a little bit more adventurous, and most of the folks in our room, of which there are many hundreds, many hundreds actually, one day it's going to be thousands. One day. I've been saying that for far too long now. But anyway, it's there's lots of folks see the value in this because, hey, look, there were things in here that went as much as 24%. And if you just kind of short the Dow by way of buying it long, you're looking at, like, right now, well, you're looking at a loss of about 3.3%, Whereas these stocks are way out in front of that. Even the worst one is 2.4 down, which is up because it's we're assuming the short sale here. So Coinbase is kind of the worst one of the bunch. So if we look at these things, this might help put things in perspective for some. Here's a stock that went parabolic. And while earnings are okay, the value of this thing has always been 12, right? So it just went too far too fast. with not good enough reason. I'm going to guess that something else happened here. You can click on news and you can find these, and we often do this. We investigate, kind of what's going on. You bring up the news feed. I like to jump down on Yahoo right to press releases. And Opera's new native browser, that was 22 days ago. I'm not even seeing a press release. I'm going to assume earnings then. Nope, I don't know. So whatever it is has not hit the breaking news or the more important news on Yahoo just yet. So you could go to Google and try to find it out or whatever. But I'll tell you this. I mean, just price running to 30 with a value of 15 is a bit of a problem. And there's a lot of names that might be fairly surprising to some here at some point who have probably run a good distance too far too fast. So that's what this search does, actually. Each one of these stocks are going to be that situation, right? And before if we go back to that prior line of thinking, before you start thinking, well, there's lots of stocks that have gone way over there are some stocks that have gone up as much as those stocks that have value, like Super Microcomputer. So you could do it the right way. And when the wheels come off of a stock market, it's not Super Microcomputer that's going to get hit as hard as some of those other ones, because they're worth that much, All right, but anyway, let's go back to Applied Opto here. So you got kind of dark cloud cover brewing here on sufficient rise for short-sided traders to be super interested. So again, it's a company that's got a little bit of earnings power, but they're worth about $3, and they had been trading close to 12. And so that's what this strategy does. Is it goes out and tries to find some of these huge runners. I'm not sure I would take a short position on anything Bitcoin related. You just never know what's going to happen in that space. I don't love that space in general. I did trade it. I even did the 24-hour thing one time because I got so hooked in some of my trades. But I doubled my money and I was like, I'm done. It's just not worth it. I'm one of those guys. I got to be all in. So I would literally be trading until I had to sleep. So I avoid that stuff. But this is probably going to pull back. Not only probably, the likelihood is you're going to pull back and retest kind of this area on the chart. All right, so that's the kind of coaching you're going to get in this room. Make you a little bit more comfortable, a little bit more confident about what you're seeing and what looks like some of the better opportunities. What are the ones to be more careful with? All of that stuff. I would have said the same thing to my group this morning. I don't mess with this Bitcoin stuff. You guys want to do it. You're trading basically just volatility, So have at it. I get it. It's like gold or anything else, really. Sort of. Yeah, almost all. But, there are differences there. Okay, so we'll go down here to maybe Nomo Mojo, see what's in there. A lot of the same stuff, right? Because these are all the stocks that went up a little bit more than they really should have. And their earnings aren't on fire like an NVIDIA, where value's actually trying to catch up with price at this point. These are situations where value's not trying to catch up. Like Carvana at 37 is just ridiculous. I mean, it's absolutely ludicrous. It's worth what's it worth? $1.36. Yeah, that's what I want to do is buy my car out of a vending machine. I mean, what's going? The world has lost its ever-living mind. It's crazy stuff, man. All right. How do you get the market timing graph you're illustrating? Oh, the DTI one? You can't unless you're part of this group that we're going to talk about here in a second. So it's coming. There's always a pitch at the end, right? But if you're interested, which you are, I'm going to show you a very cheap way to look at it. And when I say cheap, very cheap. We're we're talking like $30 for a month. That's $1 a day to check it out. Okay. And then, that's how we've grown to many, many, many hundreds is people just checking it out. And, most of them like it. Okay. So all of this plus some of you don't like that. In fact, I, unless it's automated and I've got some rules and it's a trading system and I've got full faith in the trading system, and I'm willing to do 10 of those stocks at a time so that the law of averages work out, fine, I'll do a ballistic new high short. I generally like to go more this direction, and generally it's not going to perform as well, but it's going to be more consistent. And you're not going to have stocks that keep exploding even after you short them, which cause you a lot of upheaval in your tummy sometimes, that kind of thing. I am very much the trading should be boring variety. And by boring, I mean, you don't have those kinds of situations where you take an action and 2 hours later you wish you wouldn't have. It's a kind of deal, I avoid that like the plague. So, we'll give you coaching on that too, obviously. And worst stocks over 10, worst over 20. These are more of the steady downward mover variety. Now, the market has been up for a few weeks in totality now. And so, they're not going to be as pretty as they are sometimes after the market's fallen for a week or two. But you can see they're not spiking like the other ones were. And we'll say things like, hey, this one doesn't look all that great because it looks like it's being responsive to, here's that gap we were talking about on the market earlier. Look where we're talking about the market might find some support there. Look where price is finding support now in relation to that gap back there, okay? So this one looks actually like it is going to at least try to turn the corner. Where we would like this one is if it breaks through the recent low. If it breaks through the recent low, we would like that one there, okay? This one's looking pretty good, actually. It's had, the earnings are a mess. It's only getting worse. Whatever this rally is fool's gold. It's a biomed, so generally I don't like to short biomeds though, unless you at least take a look at, do they have a early stage clinical trial coming up? And that's a lot of work, so I just avoid that. I'd rather short a Carvana or a firm or some of these companies that for some reason everybody wants to buy even though they're not worth anything. I'd rather do that and not have to worry about some clinical trial or some conference that they're going to and the stock price jumps 12% because they're going to a conference. They're going to talk about this cool drug they got. That's ridiculous stuff. So here's Inviva. Earnings going the wrong way here. It's clean energy. I don't love this one. It seems like it just doesn't have a lot of life to it. So this is better. Break through the lows here, and you can get on. Look at that earnings just going the way you want it to if you're going to be short, right? Earnings going down, prices going down. That's what we want. This is more my style here, honestly. I mean, it really is, and generally works out pretty well. This one's looking like almost the best one yet. Other than earnings aren't quite as bad as they seem to be basing a little bit. But in reality, another way to handle all that is just take all 10. Then the odds of success are in your favor because none of them have good earnings. And so the law of averages should dictate, as it has today, that these stocks continue to fall. Mm-hmm. And that would be the case if the stock market continues to fall. The basket, you would, on most every occasion, will fall with it. Okay. Worst performing so here you get to your contras, and so looks like the banking sector is taking it on the chin pretty big today. So these are up. This is inverse. BNKD is inverse microsectors banks. Inverse to, I believe, just banking in general on that one. We can always right click, view the full stock analysis report, and get the exact description here. U.S. big banks. So it does make a distinction. Okay. And then you can pull open the chart. Obviously, banks have begun to report. You got more coming. I think everybody's kind of onto this Bank of America situation. Reminds us an awful lot of Wells Fargo. And that was a mess. So anyway, you're starting to get a bullish engulfing. you get one more up day here and you think about, yeah, this looks like a pretty good opportunity, if only to trade it to just north of 12 or, kind of where we go from there. Begin to take some risk off the table as it continues to rise. Trim the position down a bit, but could be a quick hitter there with banks. If we look at things more broadly, we've got high beta, which is often one that I like to do if I'm going to go leveraged, because it kind of desensitizes and goes across all markets, and you're just looking for volatility is not the right word, beta is the right word. I'm not going to do a class on that right now. There's stocks that like to move, okay, and you're basically shorting a huge basket of those. And this one is on a more valuable pattern called a one white soldier. That is an actual pattern. You can Google it. And it's a very important one. It's one of the more reliable patterns in all of 2-bar patterns that exist. So this market looks like it wants to at least go higher tomorrow, or which would be Monday, right? And then, we'll see how we want to treat that trade from there. You at least want to set a stop right below the low, right? Often what we're going to do is like a 50-15 or a 15 to 20% trail. I found anything else to just be too tight with these kind of things. And what we really like on contras are 3 and 8 crosses. And that might be until like next Tuesday before you would get a cross here. So that's where the coaching comes in play, because you don't want to necessarily wait that long, but it would be a good thing to look at in terms of, I'm going to have to go back a ways on banks to find an up call. but it gives you pretty timely exit information on your trades. I think is going to be more valuable. Okay. You get all the coaching as part, and all the tactics as part of this trading room that we're going to talk about here next. But that's what we would have done today. We would have gone through, certainly I would have, gone through all of the top bearish strategies today early on. We would have made distinction between some of you that want to be more aggressive with the high flyers, others of you that want to pay things more conservatively, like I do, with the more high momentum variety, and also the distinction between levered and non-levered contra ETFs, and which is the right solution for who, right? And what are some of the better looking charts? What are the ones that are setting up well already? And all of that kind of stuff. Realizing we're not going to tell you exactly what to do, but we are going to help you make those decisions in a big way, because we're going to say, hey, this one looks good according to this is what it's telling you. This one, the non-levered, is great for folks who have never traded leverage at all. In fact, don't trade leverage until you have traded these other ones. That kind of stuff, okay? All right. So let me get out of here and just kind of wrap things up. I'll make it short and sweet for you folks today. And thanks for being here. And it looks like more have come online since we started. I know we were having a lot of GoToWebinar problems, guys. So not we, they were having a lot of problems. I didn't get in until about 3 minutes before we started, so I can see why some of you weren't here at the beginning. We apologize on their behalf, okay? And believe me when I say they don't feel great about it. I'm sure they don't. They're a very good company. But anyway, YouTube, you guys are, I don't think YouTube ever goes down, does it? It's the right place to be. Okay, back on track, chap. So, where are we saying right now at this very moment? Still bearish? Your decision was earlier in the day. So anytime I'm going to make a decision, I want to see where is the current line. Today was bearish out in front. So we were a bear all day long today. Still are. However, I would not initiate any new trades on the bearish side until this red line stops falling, and guess what I'm going to say it needs to do again? Which it might before the day's over, okay? Start rising, right? I don't like typically doing trades this late in a day in general. I also don't like to step willy-nilly into amateur hour early on, right? So this tool helps us get in early enough to make use of the day and days to come, right? And not take on too much risk by getting in too late in a day and kind of being underwhelmed with the start and getting frustrated and just closing the position down only to see it go down more the next day or whatever. We want to try to position ourselves as best we can, as early as we can. There's a lot of value in that. And even then, I'll be just quite honest with you. Very difficult for you to like do 3 or 4 trades in a day and all of your trades are up at the day's end. If you've been trading for any length of time, and I don't care how good your technique is, that's just not the typical experience. So, in fact, I find the opposite is actually, no matter how good. That's why everybody uses an initial stop loss, right? But anyway, it's, we try to do the best job we can to get off to the best start as possible, realizing, there's a penalty to be paid for being sure. More sure. You're never sure, but likelihood, that's the word. What we do is we see enough to establish likelihood that things continue our way. Okay, so if you like what you heard today, like what you saw, which I'm sure many of you did, I don't want to think for you. We have a very nice sophisticated stop loss called Profit Locker, but as you can tell, I'm going to say this. If the market opens lower Monday, we're probably going to shut down a lot of our campaigns. We've got stocks up like SMCI. Have you guys seen that stock? We did another trade here again recently on SMCI. We've traded them several times this year, actually. And we're up about 20% last I looked on this trade that we got up off of support here just a couple weeks ago. And, so what we're going to think about doing with these things, even though they're undervalued, even though we're traders in this room, we're going to be thinking about trimming down that position at the very least, but more than likely just, hey, looks like things are petering out here. Let's take our money and run. And then what do? We wait. We either go short if there's enough evidence to do that, or if the market turns right back up, we go find another SMCI. Or another one that was really good until today was Vista Energy. Just so that you guys know, I don't just spit out all the good stuff. We're up about 1%, I think, or so now on Vista Energy after, at least when I looked earlier today, it might have actually improved. They had a bad earnings announcement. We were up about 13% in this one. Oil's been on about a month-long run. Yeah, we're up a little bit more we're probably up about 3% or so right now on Vista Energy still. Okay. But I think we got in very early this day. That wasn't a great report. And we can put the earnings marker on here so you guys will know that I'm not, because I don't think you can see it on Yahoo and other places yet still. They did, in fact, announce earnings today. It was underwhelming, which is surprising because these guys, I don't know if you know much about them. I think that over time, this situation will probably work itself out. I haven't had a chance to hear the report yet, but value's been soaring here, and earnings have been very, very nice. Of course, in spite of the fact that oil and everything else has come in a good bit. It's starting to surge again, So it's a very interesting play here, and I still like it, to be honest with you. All right, so anyway, let's get back over into, so we use this Profit Locker stop, which didn't get stopped out today. It's super smart, okay? We have a 50-15 on that trade. It did not get bounced today. Now, we got in early enough to where today we didn't get shook out by all that nonsense. We'll see if it's nonsense at the end of the day in a few days' time, right? I get that. But we didn't get shaken out on the huge volatility spike that probably damage would have been done. So what are you learning? You're learning that these guys have a pretty good handle on what to do, right? And then if I get involved in this group called the Jockey Club, they're going to be talking about all of these things every single day. And so I'm really going to learn how to flex my muscles a little bit with this tool and at least know what they know, if not more, because I've been trading for 50 years or, whatever the case is, right? But you're going to learn how to use our tools from the best people to teach you how to use our tools. And that is a verifiable fact. Today, what you learned is how to keep the wind at your back on your short-term trades. We like to use a multi-approach to that. We like to look at the global picture, at least by the daily chart. We like to leverage our timing models for added confidence. And then we like to verify opportunity intraday with the timing indicator for follow through, okay? That way, all of that, market direction is a complete science from A to Z. There's no guesswork. The tools give you the answers. Done, right? Then we go to the top of the derby and we say, here's where we want to start fishing. We want to start looking at these stocks or the entire basket of stocks from these top strategies and trading them. Because if we do, all the probability of success is on our side. That's it. That's as stress-free as we can possibly make it. Then we have the right stops to use, but also the wisdom to know that sometimes markets swoop over before you're ever going to want to wait for it to hit a stop loss. So we're going to give guidance on that too, like we will be Monday on a lower open with a little bit more to it than that. But if it looks like this is in fact a swing high that's developing right now, okay? There's no such thing as you can't do it. What I'm telling you is we do it all for you, essentially. Yes, we do. So there is no such thing as you can't. I tell you what, well, nobody's ever told me I couldn't do anything. I was pretty fortunate, right? But if somebody ever did, look, the most fearful class I ever took in my entire education career was public speaking. Now I've been in Hong Kong on the same stage with Steve Forbes. You know what I mean? It's like, I almost failed. I almost flunked out, okay? Because I was so deathly afraid of doing that. All right? If you want to do it, you can do it. You just got to want to. The only thing that I can't fix, there's only one thing that I can't fix for somebody. I can fix everything else. I really can. The only thing I can't fix is the want to. So you got to want to do it. It's that simple. You got to want to. I can't fix that. If you don't want to, can't help you. Wish I could. You can adapt and thrive no matter what the market throws at you. We're going to show you how. Don't believe me? Try it out. Make fun of me in the chat all you want. I know the track record, okay? $29 for the month. Is it for everyone, having said all this? No, it's not. How many people ever told you that as part of a sales pitch? It's not. But the people that know that it's for them already know, or have an inkling, hey, I ought to at least go make fun of this guy because I know more than they do. Right? It can't be quite as good as it seems. Well, look, I've smoked cigars cost more than $29. I'd certainly spend that to make fun of me if I were you. Get in that room, man. I'll change your mind. www.vectorvest.com/thrive. www.vectorvest.com/thrive. That's all you got to do. So I'm going to put this out in the chat. Oops. I meant to put that out in the chat. Hold on a second. Why can't we give you the DTI to all of you? Because it's built into that tool for traders, and the company decided, not me, the company, that they wanted to charge for that tool. Because you know why? We have developers that want to be paid many thousands of dollars these days to create those tools. And so if we don't make you pay for those tools, we don't exist. And that's a fact, Jack. All right, that's why. See, I'll tell you the real story. All right, let's see chat. All right, so that link right there, if I click it, will take you right out to a place where you can do the sign up. No funny business here, okay? $29, just like I said. That's good for a month. If you decide to continue, you have to call to cancel. If you decide to continue, it's $249 a month or $25.90 a year. So what I always tell folks is, everybody's in a different situation, okay? But generally speaking, if I can't show you how you could have made the cost of the subscription easily by year's end, for many folks, I've been told, Chapel, you said by year's end, I made it in the first month. You know, it was an easy decision for me. I've had some folks say first day. You know, it just depends. Everybody's in a different situation. Everyone is a different situation. You got different amount of money that you're going to be putting into it, all that stuff. Okay. So what I would say is this: at some point, you need to be fiscally responsible, right? If it looks like you can comfortably, if the tool can comfortably pay for itself, if what you observe in the first month indicates to you that the tool can comfortably pay for itself over the next year's time, then you do it. You continue. It's that simple, right? So that's my pitch. My pitch is, if we're not good enough, don't continue. That's my pitch. If we're not good enough, don't continue. How's that for a pitch? All right, guys. We'll see you hopefully soon. We'll see you in that chat room. Get into it. All you got to do is $29 to try it out. If it doesn't work, it doesn't work. If it works, it works. It's that simple. I'm going to leave it at that today. Take a different approach. We'll see you guys in there. We'll see you in there, guys. Good luck. See you soon.